Okay, it looks like we're live. What's up, guys? This is Jeremy Clark, aka Mr. 66 USA on Twitter, and I'm going to do a quick, well, hopefully quick, video on how I use Fibonacci and how I set up the Fibonacci Retracement Tool for trading. This is being recorded for my UK crypto group, Crypto Cartel, which was put together by the King at Crypto XRP Luke. You can find him on Twitter, and you can hit him up for an invite to the group. This is if you want to trade crypto. And again, it's a UK-based group. I'm coming to you from the US, and we have a lot of interplay between our UK and US members. And so just giving you guys a shout out. Here we go. I'm going to dive right in. All right. So first thing I want to talk about is drawing trend lines. How do you draw trend lines? How do you find them? Real easy. I look for the highest high. That's going to be your swing high. And in TradingView, I'm just going to go over here and we're going to draw a horizontal line right at that swing high. Going to go over here to the swing low, and TradingView is telling me with this red dotted line that that is a support line or a previous resistance line. So I'm going to go ahead and use that because it's usually more right than I am. And I'm going to lock these in place just because that way I don't mess them up. Okay, boom. So super simple. We now have a range on Bitcoin. You can see that it started when there was this resistance line broke and was slightly retested as support. Came back, hit this line up here, resistance. Came down, there was a little retracement right here. This happens to be a 0.382 corrective retracement. I know because I've measured it about 65 times. And it's now seared in my memory. Yes, that's what happens. So we dropped from the 382 down to this support line right here. So if I was going to add some more horizontal support, and again, I always start with horizontal support before I dive in and start doing the diagonal lines. Everybody wants to draw the diagonal lines. Diagonal lines can be tricky because sometimes they're just a little uptrend. Sometimes they mean something, sometimes they don't. So kind of talking about market structure here too. So I see a little bit of market structure, and I'm just going to borrow this line because I've already drawn it. And I'm going to go for the most touches. And let's lock that. And let's lock this one in. Okay, so you can see we got a little trading range happening. This is a base, and it's a range. If you wanted to trade this, you could go in tighter, and I'd be looking for a price to break either out of the resistance line and go higher or break below. In this case, probably below. You can see we have another range right here, and I'll go ahead and draw that in for you. There we go. One more. Okay, so this little range is also known as a base. This is a basing formation. So we got a drop, boom, into this range right here. We based across, and then we broke out. And then, so we got a base, drop, base. Okay, so this is an area that could be considered an area of supply. And once the big boys, the big pockets, accumulated enough of this, they started selling it off. They started a capitulation sell. You can see the heavy volume, and everyone jumped in and sold off because price was going down, down, down. And then we got this signal right here, this kind of a morning star doji telling us that that's it. We've now got buyers coming up on this tail, and that set the new range. And then it went into this accumulation zone or distribution zone, probably distribution, because I think we're going lower. It's hard to say right now, but most likely. So anyway, there was a couple of horizontal ranges and how I would start. Now then, for the diagonal ranges, again, you're going to be looking for the most touches, and so I'm going to start here from the swing high, and I'm going to get as many touches as I can. Take that right to that trend line, and we'll do one more. And yeah, this is maybe not the best because this is just trending down, but that's okay. We'll use that for now. I don't really like that. All right, scratch that. Wonder if I go in a little, or go zoom out a little bit. Maybe we can get a better handle on this downtrend. So I can see, and I like to look for horizontal, what am I trying to say, parallel channels when I'm drawing my trend lines. So as you can see, this one kind of works. We got a nice up and down movement within this range. It's contained basically in parallel. Got a little breakout here, it came right back to it, wicked out, came back to it. Little double top, broke out, fake out, came back out. So this one probably ends right here on this double candle formation, and then it becomes this downtrend right here. So that's a diagonal range for you. And I know we use a lot of patterns in trading. I'm going to jump over to another chart and just show you. So this is VBLT, and you can see that we've got another diagonal pattern that formed right here at this high, and we got touches. This one again broke out. This is the infamous throw over that can sometimes precede a breakdown. In this case, we got a single throw over. It broke the upper channel line and retested underneath, and then boom, it went down. I really struggled with this pattern, and this is actually a trade that I'm still in, unfortunately. I bought around $1.85 and we went up to 220, and I'm still in this. I haven't stopped out yet. I probably will stop out tomorrow. Had high hopes for this in it, and it just didn't take off. That happens, that's trading. But here's another diagonal trend line. Again, here's another little throw over. So it doesn't have to be perfect. I like this example because to me this was very imperfect, and it was actually hard for me to chart this one. But you can see there's a nice, fairly clean falling wedge coming off of this flagpole, so to speak. So falling wedge is actually bullish, and there's usually a 5-wave structure within it. So you might go A, B, C, D, E, and I'm just going to throw that on there so you can see it. This is a corrective structure, A, B, C, D, E, and normally I would be looking for a pattern something like this, and you would see that nice W. That's a cleaner correction. Again, this one had this breakout right here, or this fake out, and so it gets a little wonky. That's typical of correction waves. They're not as clean as an impulse wave, and impulse waves are the nice bullish waves that we like to trade. So anyway, this one broke out, tested this line right here. This became a new flagpole for this pennant. So we have a bullish falling wedge right into a bearish diagonal, which is a type of triangle or a pennant, depending on what method you're using. This would be a Elliott wave theory would call this a diagonal. And you can see you got this A, B, C, and then again I drew the C here so you can see the W formation, but again this got a fake, they would call that a bull trap or a fake out. It broke above the line, and this is a signal that it's probably going to break down. When you get a single breakout above, kind of leads oftentimes to a breakdown. Once you get to the E wave, generally with a pennant, your E wave will do a few things. It might break out here and retest and then bounce, or it might break out and then fail, or it might go down. And in this case, this is what it did. It retested the bottom trend line, and you can see it kind of consolidated along here first, and it formed a little bear flag, that little L shape. So that was another clue. Once we retested the bottom of this trend line, that's probably not going to break out to the top side, and then it consolidated along this line. That's a really heavy clue that, yeah, we're going to break down. If it was consolidating along this upper line, that'd be a clue that it was going to break out to the upside. So those are just a couple little tricks for you. Okay, so I'm going to go over to a trade that I did today. This is TQQ, and I want to show you the Fibonacci tool and tell you how I entered this trade, why I entered this trade. And again, this is very imperfect, so I'm going to be correcting myself as I go along. This is up here you have the Fib Retracement Tool, and if you can't find it there, it's usually in the 1, 2, 3 second tool. What do you call these? Tool icons down. You click on this little arrow, the sub menu comes up, and down here, Fib Retracement. There it is. Boom. I have it starred, so it's favorited, and then once it's favorited, you can scroll down here and you can add it to your favorite drawing tools toolbar. So it's really easy and quick to access. This toolbar can kind of go anywhere around, and this is the Fib Retracement Tool. So just going to click on that. I'm going to start my Fibonacci measurement from the bottom, and just to show you, I started this from, you got this little demand zone down here, and I started my measurement from this this bullish candle. The reason I didn't start from this little hammer, the blue hammer here, is because we got another candle that went down. So this could be a matter of preference. I like to look for where the up move started, and in this case it works really nicely with this blue candle with volume right here. You can see this purple line too gives me the average volume. So I'm looking for candles, or I'm sorry, volume bars that break above the purple line. That gives me above average volume, like this one, like this one, like this one. So if it's below the purple line, I would say that's below average volume. Okay, so anyway, I'm going to go ahead and start from this point right here, and I'm going to measure this wave to the, basically from the swing low to the swing high. So this would be my swing low, this would be my swing high, and you can see that price came down to the 50% retracement level, 0.5. And once it did that, I knew that the move should get us at least to the 1.5 or 150% extension. These have negative numbers, which I'll talk about in a little bit, so you kind of have to extrapolate. Minus 0.272 actually is the 1.272 extension. Minus 0.5 is actually the 1.5 extension, or 100% extension of 0.5. And then you have the 0.618, which is the 1.618 extension. I'm going to show you how to set those up in the Fibonacci tool. So if we go over here to, let me see, I'm just going to click on the actual retracement itself. And then this little settings menu pops up, and go into style, and you can add or subtract all the different levels that you like to use. You can color code them. Some people like black, some people like gray, some people like red, and different people have different preferences. These are just the levels that I use the most often and the ones that work for me. You know, feel free to add as many as you like. Also, the 50% extension is not actually a Fibonacci number, but it's one that gets used a lot by traders. So you see it a lot when you're trading. My take on it is kind of that You know, I like to wait for it to hit the 0.618, which I have color coded gold. I call that the golden zone because that's where it generally will bounce from. My take on it is that the deep pockets and the hedge funds and the prop traders, whoever was trading this, it got to 0.50 and they said, you know what, that's far enough. Let's bounce this thing. And they did. But you'll see these levels over and over and over. Now, I was following this trade and the price action here. I saw it reverse, and I didn't get into the trade right here on this nice bullish engulfing candle, which I wish I did. And I got caught up in the FOMO of it, and I entered here, and it came down. And I just had been watching the price action. I knew that we had this gap to fill. So I went ahead and stayed in the trade. I don't recommend that you do that, but I was working with limited resources in my Webull app this morning, and so I stayed in. So you know what? I'm going to see what happens. If it breaks below 618, I'll get out. Well, it didn't. It bounced at 0.5, and as soon as it hit 0.5, 50% retracement level, it bounced, and I knew that it would go up to 1.272 at least. That's usually my first target. This is where I'd start to take some money off. I started to take profit. This one continued on past that to the 1.5 or 150% extension and got almost all the way to the 0.618. So this is characteristic of a wave 3 in an impulse. And I'm just going to draw that for you and talk about, I'm going to talk about Elliott theory real quickly here. I'll just get a little blank section going. In an uptrend bull scenario, you're looking at an impulse wave, and you'll see these patterns like this. There's a 5-wave pattern, and let's say that this is the point that it starts from. You'll see something like this, and then a pullback to the 618. And then this will continue on up to the 1.618 extension. This will come down. And then the 5-wave is a bit up in the air. I'll explain why. So I'm just going to use the Fibonacci tool to kind of create these levels. So you can see what that would look like. So if this was our price action, oops. Okay, so I'm looking for 618. I got pretty close, kind of eyeballed it. So there's 618. Okay, so wave 2 hit 618 and it bounced. Wave 3 should give me 1.618, and then it should retrace to, wave 4 will retrace often to the 1.272. And then wave 5 in a bull run may not make it past 3. It has potential to continue on to 1.618, even 100%, even this high. There's some characteristics of an impulse wave that are really quite fascinating. One of which is, let me switch to my pointer here if I can find it. Okay, so wave 1 is in a wave 3 extension. You'll very often see wave 3 will be the longest wave. So this is the wave that traders like to trade. This is the entry wave, so sometimes you'll see price take off and you'll get interested and you'll say, well, I'm going to wait for this retracement to the 618 or the 0.5 level, and those are two very good bounce levels. You can also bounce off 382, but 618 is the one that gives me the most consistent results, meaning once it hits this, I know it's going to hit the second gold 1.618 up here. Wave 1 to 2 will often equal in length wave 3 to 4. So this one might be more like this, or it might be more like this, but it will be measurable approximately the same length, which is kind of cool because it gives you another level to bounce, or another, if you can measure 1 to 2 and you're now in your wave 4, you can predict the bottom here. And the bottom also should usually retrace to the 1 level, which is this 0 level right here. Sometimes it will retrace as far as 236, but almost always you'll get a 1.618, and then it'll bounce back down to 1.272, like so, or possibly all the way to 1. And then once it does that, wave 5 will move the fastest. Typically it'll take off and run. It can also be the shortest. It can be truncated, so these can be a little unpredictable when it comes to targets, but they can move very fast. So with these, you want to get in and just ride your stops and take as much profit as you can. So ideally, if I was to trade this, I would be looking to enter my trade off of the wave 2 and then capturing this move here. And I would look to take profit right at the 1.618. I would probably start to take profit at the 1.272, and if it continued, I might take some more off at the 50%, and then I might ride it all the way to 618. Once it hits 618, I'm probably out of this trade, and I'm going to wait and see what it does on wave 4. So that's a good trick. That's how I trade. That's a momentum trade. That's how I trade momentum quite a bit. Okay, so I'm going to go ahead and get rid of all this, remove all that, and let's get this guy going again. Okay, cool. So I just want to show you on Phantom. I'm going to go over to Phantom, and this is on the 3-day. So this is looking all the way back into, what are we looking at? August 2021. And I went ahead and set this up in advance just to show you again. So I started my level from, you can see there's this little climb right here, and then there's this red candle, and it kind of tests this line. So this to me is the bottom of the move. So I started my Fibonacci measurement from here, and this went right up to here. This is the first swing high, and then it came back to the 618 level. So perfect. This would be where I would enter this trade, and then my first target would be the 1.272, and as you can see, that landed right here, and then we got to pull back to the 1. So purple line, blue line, and then it continued. Once it continued, then my next targets on this break of the 1.272 would be the 50% level and the 1.618. And you can see this one continued all the way up to the 100% extension, and then we got this double tweezer telling you that the move was finished. Tweezer tops were done, and then it broke down from there. So this was done on the 3-day chart for Phantom. Going over to SPY on the 5-minute chart. This was from today. I didn't trade SPY. I didn't even watch SPY. I should have, but same thing. The move started, and again, I'm going to start from this blue candle because I feel like this red candle was still making a bottom. The blue started the new move, and you can see right there, that's where that started. Swing high, 618, and then the 618 hit the 1.272 target. It hit the 50% target, and it perfectly hit the 1.618 extension. So to go back to Elliott theory a little bit, in an impulse wave, which is a bullish directional wave, it's a 5-wave pattern, and you'll get a wave 1, you'll get a 61.8% retracement. That's your wave 2. You'll get the longest wave typically is wave 3. So wave 3 should be longer than wave 1. As you can see, it is here. And then you'll get another pullback here, and that should be the wave 4, and then you might get a truncated wave 5. And this is saying we got this big meaty move here, we got this move here, we're done, we don't care about pushing it any further. The deep pockets are out, and they might start pushing price down. Now this 1 to 2 wave looks quite a bit longer than 3 to 4, so there is a chance that this is still a 4 wave that's in development, and that there could be, you know, a 5 wave that it could continue on, it could get hit, it could get truncated, it could just die off. They're not very kind to the 5 waves, especially in the stock market, and well, especially in the crypto market when it's running. But you can see that these same levels, the 618, the 1.272, and then these extension levels, the 150 and the 1.618, they came into play again. I'm going to flip over to SPX, and you're going to see, you know, the same thing. I mean, in some ways, these are mirrors of each other. They're the same, sort of the same movements, even though they're different instruments. Again, I started from, okay, so this one I kind of started from this little hammer candle there. And, you know, some of this move could have been corrective. At any rate, just to show you, then we got the 618. So here's your swing high, 618. First target, 1.272 was hit. Second target, 1.5 was hit. Third target almost hit the 1.5, and you'll notice here we hit the 1.5, and we came back to the 1.272, and then we went back up. So this is probably your tiny little wave 5 right here, or this could be still part of the wave 3. I'll show you what I mean if I draw that. So here's your wave 1, wave 2, wave 3, wave 4. It might end up like that, but I have a feeling that this was actually the move. So you got your wave 4 and your wave 5 got kind of cut short there. And that's because we had this big meaty move, and the deep pockets decided to move on from this trade and push it the other way. But as you can see, the Fibonacci just keeps repeating. You see these patterns play out over and over and over. So here's ES1, which is a derivative of the S&P 500. This is a mini futures, and just get rid of that. I think I drew this to show you just more trend lines. And going back over to QQQ, this is the NASDAQ. Same move. Here's your 0, 1, 2. This one retraced to the 50% and got up to the 1.5% extension. At any rate, my first goal would be to hit these 1.272. So if I was going to trade this, I would be looking for this level of the retracement. I would be looking for either 0.5 or 618 or even 382. But my favorite by far is the 618, because once I get a 618, it almost guarantees that I get a 1.618. It certainly guarantees I get a 1.272. 1.272, the significance of that, I wrote this down. It's the square root of 1.618, meaning I think if you, how does it work here? Yeah, if you multiply 1.272 with 1.272, you get approximately 1.618, and that's the golden ratio that's used in art and architecture, and it measures, you know, snail shells and conch shells and all sorts of anything to do with a spiral. Very effective in art, very effective in the stock market. It's a fractal measurement that measures all sorts of things in nature. So that's where they get that from. If you multiply 0.618 with 0.618, you get 0.382. So that's where one of the ways you get the 0.382 number. If you multiply 0.382 with 618, you get 0.236. And if you divide the 1.618, which is this guy up here, if you divide 1 by 1.618, you get 0.618. So it's math. I'm not very good at math, but I think it's beautiful and awesome, and I love it when it works for trading. And the great thing about the Fibonacci tool is you don't have to do any of these computations in your head. It's all preset for you. And so again, I did want to touch on why these have a minus in front. So I'm going to go back. I'm going to click on this line. That's going to give me my settings menu. So going back into here, and you can see that I added this. And so what this does is this gives me an extension. So this is a retracement tool. So it's measuring 0.1 to 0.2 and then 0.2 to 0.3. This is your retracement. There's a move up and then a retracement. And once we get to the, the zero line, we can add extensions in the negative space, so to speak, which is the space above. So that's why it's minus 0.618 is actually the 1.618 extension. Sort of the inverse of the retracement is the extension, if that makes sense. And it sounds so complicated, but it's really not. And there's only 3 or 4 ones that I really like to use, which is 1.272 marked by the minus 0.272, 1.5, which is marked by the minus 0.5, and then minus 0.618. I went ahead and added the 1.414 and the 1.618, which is actually the 2.618, which is the 200% extension. And you can see those up here. Sometimes the 1.414 will hit, and I know people use that a lot in Forex. And then sometimes if it's really running, you'll get all the way up here to the 1.618, which is, because that's the negative, this is actually the 200% extension of this original move. So when we're talking about extensions, what that means is this move right here is your 1, and then you get an extension of the move. This is your 3 wave, and if you were to add the 2 together, for example, let me just show you what that looks like. If you added this arrow and this arrow, it would give you the 1.618 level, and that would be 100% of this move, meaning 1 plus 2. So you're measuring from the retracement point as opposed to just a static horizontal level. Okay, so one other thing I wanted to throw in here while we're on the subject. Well, I do want to talk about VWAP, and I think I'm going to save that for the next course or the next the next class or demo that I do. I think that's probably good for now. This is a first tester. This is the first screen share recording that I've done. So using this more as a test to see how it works out, and also wanted to throw it out to a couple of our members who missed the first one, the first screen share that I did for the other guys. So I'm going to close it down here. If you guys have any questions, feel free to DM me or hit me up on YouTube. This will be posted soon, and you can find it there. I'm going to link to, we'll keep it pinned to the Crypto Cartel Discord. And thank you guys for watching. I will see you on the interwebs. Cheers.